What's going on, YouTube? In this video, I'll be explaining how session timing shapes price behavior through the CRT perspective. So I'm going to just get straight into it and we can get right into the example. So what I actually did do is I found a indicator that allows me to show all of these sessions out as the market is playing out. And just to clarify, right? I don't actually ever use these type of indicators. I just pretty much found it for the video so that I can make things more following for everyone, in terms of the chart, right? So, and just as a cool little bonus is that it has the time of day at the top as well. And I just want you to understand that when it comes to market sessions, they're not just time blocks, okay? Every session marks the shift of new energy in the market, which means that once there's a new session, right? Let's just look at this from London to New York. There was a clear shift in its energy. There was a clear shift in its intent from that point. Like you went from a clear uptrend momentum. The market was temporarily what? Bullish. It was temporarily retracing overall and then aligning back in New York with a clean CRT, and it was clean from there. I want to explain why this actually matters with CRT because, like, as you can see, you have each session, right? You got Asia, which is Tokyo here, London, New York, and Sydney. So what I'm trying to get at is that each session creates a distinct candle range and it brings its own momentum and behavior within that structure. So let me just see. Look at this. Let me zoom out the market. So just right here, right, for this example, from a market-based perspective, I'm only looking at these three. I should probably take this off. Let me just zoom in a little bit. I don't want it to get too noisy now. This is exactly why I don't use these type of indicators in the first place. Just as a quick understanding, right? You see the beginning of Tokyo session, right? Which is agent session. So as an agent session opened, the market overall was in this area of accumulation. With this candle, I would count as a CRT candle, but I'm not going to get too much into that. I'm just going to show you how you can see once this session opened. As soon as it opened at, I think this is 8 o'clock, if I'm not mistaken. As soon as this opened at 8 o'clock, the intent and energy behind the market completely changed. It now went out of accumulation mode and went into distribution mode. And the reason that that's important, right, is that you have to be able to understand the context that started around this opening of the session. For now, I'm going to take off the indicator and break down this bearish movement here so that you can actually see what I'm talking about. During this area, what you actually had is one, okay? I'm not going to go into full context, but I'm going to give enough so that you can understand what's happening, okay? What this is, what you view this area as prior to Asian session open, was all of this is accumulation, right? That's all this is. It is nothing but accumulation forming, okay? So the way I will break it down is I will label my one here, right? Now, this perspective is from a market viewpoint. It's not exactly from a candle viewpoint, but it's from the overall market. So you have to factor in everything, all the context that's happening within the market. And so what I mean is you have this accumulation, right? So once you understand that, let me just go back and see which which session that this formed in. This accumulation formed from London to New York. Okay. At this point, this was 11 a.m. Let me take this back off. This was 11 a.m. Price it left accumulation here. If I zoom in, I'm not going to zoom in, but if I did zoom in, I'm pretty sure there was more areas of consolidation. Price then dropped from this area, still in New York session, formed a bearish CRT because you have this bearish candle, this manipulation candle, and then you have this expansion candle. And you can label this minor liquidity point as the key level because it's the lowest point of liquidity that you would be trying to look for to be collected within this current range. So as you are in this session, which I believe is still New York session, yeah, this is only 2 p.m. Here it is 3 p.m., 4 p.m. Eastern, 5 p.m. Eastern, which means the market just closed. 6, 7, we're beginning to enter pre-Asian. And now 8 p.m. you have the full session open. What price was doing is it was making its way back up to take out the orders that happened in the previous session of New York session. Took those orders out. Anyone who was in around this point were literally swiped out. As you can see, they were literally swiped out. And now the market then had enough energy to breathe back down into a bearish direction. So understanding this, that okay, price is coming back up, taking out these highs. Let me check if price actually did sweep this higher, did it just come close? I think this was just a near tap. Yeah, well, I think it was actually like 1 point away, which is insane. So I think there was actually, or 1 pip, however you want to say it. So it was literally one touch away, but overall, that's close enough to collecting all of the liquidity within this area. Because off of that, you understand now that the intent has changed from the market once agent session opened. The market is now going into a new seeking phase of new liquidity. The market is looking for new liquidity now. So this area, you can anticipate this area being the high of the session because it collected the liquidity immediately, pretty much, and there's nowhere else for it to go. Right? The market always wants to move towards liquidity. And if you look here, if you look above it, there's no more liquidity. So you go, okay, well, there was some back here, but in context of what we're actually looking at, that liquidity is external liquidity and is really out of the current structural range that we are in. So once you enter this area in the session, you can then understand that, okay, now our new intent and we're looking to go down, which is exactly what the market did. It went, collected the liquidity at these lows here that it formed in New York session. Okay. So you see how it goes from session to session and how the timing of the session actually changes what the intent is of the current CRT cycle that you're in. So since I marked the 1, let me just go ahead and mark the 2 here. That shows manipulation. Okay. So your goal here is to always look for peak manipulation, which was price tried to come up. It failed, but it still came up a little bit. Then it began to close back into this range. And now you have your new distribution forming. Okay. And now with that, you got your 1, 2, 3. Sometimes it's actually closer because you can actually label this as a 1 as well, because this area is also accumulation. And this happened around 5 to 4 a.m. I mean, not a.m., but 5 to 4 p.m., which is still in alignment with why the market will want to collect that liquidity, because the market closed, it began accumulating a lot of buildup here. And once the market began to open back for agent session, it collected that and began to distribute, like I said before. So now once we have here, we're still in agent session entering pre-London. You see that we're still in this session, but it began to do what? It began to accumulate, but we understand that this is still our distribution. So we're any upwards movement is a temporary retracement. We're going to look for another decline, and we got our decline in London session, which is when the market began to pull right back down. And then if we just keep following along for this moment, right, we just keep following directly along. And London session, well, this was late London session, more pre-New York. You had the market form CRTs, but ultimately it was changing intent. So what you want to be able to do is start paying attention to what is actually happening within the phases during these overlaps or just during these transitions of sessions. Okay. Now, specifically, as you can see here, we should know that around London session, volatility increases, right? So this means that the market will tend to do more manipulations and just more volume behind the market overall. So you can see, right, the market picked up momentum, the volatility increased, right? Pre-London, the market started to have a change of behavior as it was preparing for New York. That change of behavior began to be shown through CRT as you had this low, this bearish candle here. You had this low, it swept. I'm just going to just draw it out. I'm pretty sure on a higher time frame it was much clearer, but if I go back right now, it'd be a lot of confusion. So I'm just going to explain the best I can from this time frame. And so as you can already see, you have this sweep, you have a high to target, you target that high, it would have played out smoothly. This would have been pre-New York session, right? And then you have the same thing pretty much forming again and again as the sessions go on. You see more intent. Okay. Like here you have another You have another expansion, manipulation, reaccumulation in this area. So the market reaccumulated, right? And then expanded again. So the way that I would draw this out is you can have 1, 2, 3 here, because you can see on a smaller time frame, this area, which was pre-London session, well, not pre-London session, late London session, actually, around pre-New York. You had a full bearish candle close. You had the sweep of the candle low, being this low here. That low swept there. And then you had the expansion. So you would have a minor accumulation, manipulation, expansion. Then now once you enter this area, was this the next day? Let me see. This was Wednesday, June 4th. Okay, so this is pretty much still same day, but it was at the end of the day, entering a new day. You would have your accumulation here. Now this accumulation, right? This happened at the end of New York session. So what this means is that you don't want to take any buy orders pretty much this late into the session, because the market is more than likely going to open up, collect that liquidity before going back further into an expansion. And that's if you're in the uptrend. So like you should know, we are in this uptrend here. You have the accumulation, you have the manipulation. When you can look at this here, draw this line, you pretty much have price reaccumulating, right? So you had a minor accumulation, but overall this was just one accumulation zone. Okay, and since this is a continuation, this was pretty much just reaccumulation, because we already had our accumulation within this area. So it's reaccumulating. And now at this point, this was during agent session again. And then you had, once you started to see this bearish momentum come in around the beginning of London, pre-London, that's when you pretty much know that, okay, this would pretty much be our low of the session. And we are getting ready to expand for the day or for the morning, because it is 3 in the morning to 9 a.m. was the full expansion. So within this area, you have your expansion, which is always phase 3. And this is just a very rough analysis, very rough. And, I didn't go too much in detail, but it's still showing you the flow and chains of intent during the sessions. All right. So then as you can follow along here, we had this expansion at London session. It kept going, kept going. We're now entering pre-New York. The expansion continued. Then you have around 9 to 10 a.m. there was a peak. Okay. So now what you can actually do, right, because of what actually happened within this specific example, you want to pay attention to what happens during the overlap times. So what I mean is around 9 a.m. into 11 a.m. is the overlap of the session, which is the most volatile time of the sessions, because you have both London still in play and New York still in play. So you have a lot of volume within this area. So as we can see, within this area, we began to see another shift happening, okay, or some sort of change in price behavior just because of the timing of the session, okay. Now, I will mark this as a valid CRT, even though it didn't sweep the high, because of the candle structure, and just understanding that this is most likely a peak, because we already had, just looking at the left, you had another accumulation zone. There you go. See how the phases is everywhere. CRT is everywhere. So let me just draw that out. Now you have another accumulation, manipulation, distribution. But this is from a market perspective, not a candle perspective. Okay, you have to be able to put everything together in context. So now I'm pretty sure I'm just going to do it anyway. Let me just save this area. I just know that there's a CRT somewhere on a higher time frame. Okay. Okay. There we go. I knew it was somewhere, because just like my intuition just now from this point, I'm just able to just pick up when there's a CRT somewhere on the higher time frames. I never want to force it, but I just want to scroll through and look where I find it. Okay. So I'm going to just take this off very quickly so I can draw the lines of this CRT forming. You will label this out as the 4-hour high. Then you have that same bearish candle, the low. Now you could do the 50% area as well, but I'm not going to do that for this because that's just a waste of time at this point. But just off of looking at this candle, the 50% would be somewhere probably underneath this, like within this area here. But your goal now is, because you understand that this is the highest area of liquidity on the 4-hour time frame, or actually, let's zoom out. You can see, what do you have on the left? You look on the left, you have another area of more accumulation, which means there was more liquidity waiting within this area. So price should then begin pushing in a downwards movement. So I'm going to just grab over this arrow, reverse it over, and signal the new direction that you're looking to see CRT begin to push the market in. Let me go back to the 1-hour time frame. Now you can pretty much see how the fractal nature of the market takes place. I wonder what the 30-minute look like as well. Now for this, if you was to look at the 30-minute time frame, this would have been a better time frame when it comes to execution. So what I mean is, you could have your CRT candle here, your high, your low, draw out the range. Once you get into this next candle on a lower time frame, you could just read the intent, right? It began to move upward a little bit. Let me zoom in so you can see. It began to move upwards a little bit and then continue back down. So what you do with the full context from the 4-hour time frame, the 1-hour time frame, the 30-minute time frame, and even the lower time frames, I'm going to just go ahead and do it because I can't resist. All right. You have, okay, now what you have here is, on these lower time frames, you have bears beginning to come in from the smallest signs. Okay. So what I mean is, you have this here, bearish candle, these bullish candle, but overall, the way that I view this is bearish engulfing. That's it, right? So you have this bull candle. So a bearish engulfing starts from the bullish candle to where the bearish candle completely closed over the previous bullish candle with momentum. So you have 1, 2, 3, 4 engulfing, which is the fourth candle. So now from here, you have strength. Okay, so you could enter from this area and just place a stop loss somewhere above if you wanted to. Right, you could place it somewhere above, or you can wait after this area, because you understand that the market is not going to just always straight drop. Once it does a large drop, it's going to be some sort of retracement in some form. Okay, I could even go to a lower time frame and probably see it even more clearly, but I would just understand that it's so many ways that you can go about this, because even with my eyes picking up here, you have another accumulation area, peak manipulation. And then once we come back below this level, you can have your phase 3. Let me just draw out the 1, 2, 3 so I can show you what I'm talking about here. 1, 2, our phase 2, our peak manipulation. And our phase 3, once price comes back underneath. So technically phase 3 wouldn't begin until we got this closure here, and price began to show that it's respecting inside of this area. And that's from this perspective. So it will look more something like this. But just off of just understanding this, understanding this bearish candle, you understand this as the peak of manipulation, some sort of small retrace, and that you can actually look at it like, okay, distribution on a smaller time frame, the market manipulated just a bit, and then now it's beginning to decline once again. Even though I just did that, I'm going to just put like a fake trade here so we can just see how it would have played out if I did take all of this overall. I'm gonna zoom back out. Now, this was pretty much understanding that we collected the liquidity here. We had our accumulation, manipulation, distribution from, as you can see, you pretty much have 1, 2, 3s everywhere, right? 1, 2, 3, 1, 2, 3, 1, 2, 3. But the point is to understand the context of what's happening. And now let's just watch the market. I'm going to take some of these away so it's more clean and clear. And I'm going to actually, I'm going to just leave it like that. I'm going to actually show what price is doing if I can. Yeah, I should be able to. Okay, now let's just watch, right? And this is to take note of the session. This is New York session. Okay, now let's see. Speed this up just a little bit. There you go. You see that bearish momentum coming in. I didn't set a low, so I didn't set a target for this. I'm just pretty much watching. But if I would to set a target, it would have been hit somewhere here, down here, which would have been a 1 to 4. In my opinion, let me take this off again so you can see the market. And I'm going to just see how far you could have possibly took this down, right? I'm not going to like recommend that you do anything like this, but just to see how this trade would have played out within this area and understanding our context of the sessions and how they changes the market behavior by bringing in new energy. Okay. Let me make this as a little bit faster. I wonder if price does come to this TP, then this just shows you how accurate it is. But if it doesn't, it shows you that you held this trade way too long. Boom. Price did come back up. And just look at just what happened. That's a perfect example of what happened to most retail traders when they trade. So as you can see, if you were just a swing trader just holding this trade, right? And if you didn't take out your entry when you came down here, which you should have, but if you didn't and you were just still in, the market began to manipulate back where those orders were set of this first swing move. So it quite literally targeted us. It targeted our move that we decided to hold for pretty much too long. What I mean by too long, this move started on Thursday on the June 5th, and you stayed in until you got stopped out, which would have been June 12th on a Thursday. As you can see, as soon as it swiped those orders out, look what it began to do. Okay, we began to be where we actually are in the market. But as you can see, once it swept those orders out, it began to come back down lower. And once you see how the sessions played in terms of, let me see. So you could see how the sessions played with the market and when it comes to this move as well, because you had London, New York began to open, and then Asian, the market began to move down. So let me just take that back off, clear up this entry area. Just pretty much just clear up this chart overall because it will no longer be needed. And so now, very quickly, I'm going to just wrap up on a few more definitions that will help you understand how sessions affect price behavior through the CRT perspective. Okay. First thing that I want to say is why you should not ignore sessions, right? And why, if you do ignore them, they create blind spots, because many traders, they miss key traps or they enter too early because they don't factor in when the move is most likely to actually happen within. And so what I mean is, as an example, is if you see a sweep of a low or a high clearly during, let's say, London session, you can now put that in context with understanding that we just swept liquidity. There is a very high chance that this could be the low of the day. So, understanding that, okay, from this point, the market is generally not likely to return here for the rest of the day. So, and what happened? It did not return there for the rest of the trading day. So that pretty much will show you that within that area, and just understanding the context within this session. Well, this was actually pre-London, so this was more Asian session. Let me just show you real quick. Yeah, pretty much Asian session. And that is where you will pretty much understand that extra piece of context. And so CRT, another thing that I want you to know is CRT uses the timing of the sessions to anticipate the shape of the candle as well. So what I mean is, it's not just the candle that forms, but it's when it forms that gives extra meaning to the candle. So let me just go to the 2-hour time frame very quickly. Right, you see this area, right? You have this bearish candle. A bearish candle is a sign of a bullish CRT setup. So you have this candle was bearish at 1, which means this candle closed at 3 a.m., but at 1 is when it began. And you can see you will have your candle high, low, close, and the open. The low was swept immediately. The low was swept soon as London session fully opened at 3 a.m. Price came down, swept this low, right? Price came, wrong thing. Price comes down right here, sweeps this low, and then begins targeting higher prices from that point during London session. And it continued all the way up into New York and beyond into the next day, back into London, forming another CRT, as you can see. And then it happens again and again, right? So then you could pretty much see how CRT is a continuous sequence of accumulation, manipulation, and expansion or distribution. It continues, right? Before I wrap up, I have a few more definitions that I want to give from the CRT perspective. Is that a candle is not a valid CRT candle just because it is big and full of momentum. It's valid if it breaks structure during a session where momentum is generally expected. So what I mean is that you will not expect a CRT to be happening right here in this agent session at 9 o'clock. You will not expect a CRT to be forming here because you have no context. Yes, it collected liquidity. Yes, it closed bearish, but in terms of the session, there's nothing there. There's nothing further to go beyond that point. So you can't just assume that any bearish or bullish candle is going to work for the CRT. You have to factor in the timing of the sessions as well and have broader context. That's going to be this video. Make sure to like, share, subscribe to the video, especially if this video helps you see the market clearly and with more precision overall. See y'all in the next video. Peace.